Had a really interesting conversation with a client this week, going through his portfolio, and like with all portfolios, there's some really nice winners, and thankfully, over an extended period of time, the winners far outweigh the losers. But there's always those dogs within the portfolio when you're holding 15 to 30 different businesses. You'll get most right, and the longer the time frame, the more you'll have right. And the ones that go particularly well will outweigh the ones that don't do so well. But it's human nature to focus on the ones that are negative. It's just how it is. It's how people are built. So you can have a beautiful portfolio with lots of capital gains, 100%, 200, 300, and you'll always focus on the negative 40. And quite often it's about time. And the question, you can't hide from the bad investments. They are there, the cost base, all the information's there to make the assessment. And that's where I've always started with talking about the business that haven't done as well as an advisor. So I always go to that point because I know clients will bring that up first. They'll, forget about the ones that are up by 200 or 300%. So I can't ignore that stuff, and it sort of posed the question that whilst these businesses are good, it's still great businesses, but it means, it doesn't mean just because they're good businesses doesn't mean they can be a good investment. And that depends on when you buy it. If you've bought it at a peak when markets were running away after the COVID crash, so COVID crashed and the markets ran away, and you were buying in around that hysteria, and then it's been down for 18 months. There was a bear market in between. Obviously jumped a bit in recent times, but a great business can still be a bad investment, and that really depends on when you've purchased it. But if we give these businesses enough time to execute, to improve, to make things better, products and services, this will have over the long term, you're more likely not to have those large negatives that were there. Yes, we do get things wrong or businesses get things wrong where things just don't go right. So that's just part of investing. But so I sort of pose the question, can a great business be a bad investment? Particularly in the short term. Over a long term, less so. I hope that was helpful, and if you want to know more about your investments, that are going bad for you on your portfolio, they're probably the ones you need to go and read more about what they're doing. Read the CEO report, read their presentations, understand what they're doing, what the future may look like for them. Thanks for listening. Catch you.